Hey guys, happy New Year's and welcome back to the YouTube channel. What I wanted to say to you guys is I hope you guys have a blessed New Year, a blessed Christmas to those that celebrate. And let's continue on with this YouTube video and this series, the Advanced Market course. Now, guys, if you have watched the previous 4 episodes, well done. You are now going towards becoming a better trader. If you have not done so, please go back and watch those first 4 episodes. Watch the beginner series as well and then come back to this video. If you guys that are in tune with this, please hit that like button, drop a comment guys, because I like seeing that support, the like, the comments. It motivates me more to do more of these videos. Now let's get into this episode 5 course and what this will entail. Let's just move to the next slide. Okay, so in this episode, I wanted to go over what have we learned so far. So if you have gone to the previous lesson, you should know how day trading works in general. You should have a bit of a gist about managing risk. You should know the advanced level of this, how to find the right stocks. You should know how to find stocks, intraday charts, support and resistance, journaling. You should know time frames. If you have not done this, please go back and watch those episodes. Otherwise, this will be irrelevant, this lesson for you. Now, let's go to the overview. What are chart patterns? In this episode, I'm going to go over chart patterns, but specifically bullish chart patterns. How to find entries using chart patterns, how volume makes a pattern, 9:30 to 12, why I highlighted this time, plus more. We start off with what are chart patterns, right? And just to put it in simple terms, it's essentially a shape within a chart. What this helps with is predicting price movements. So if a bullish chart pattern will give you a bullish bias, a bearish will give you a bearish bias. Now, this also helps with using previous historical data. So you're using previous data to make this pattern for future price movements, right? So a chart pattern is essentially something which helps you gain momentum in a stock, both to the upside, to the downside. It helps you predict price essentially before it makes a move. So it's a magical tool to help you make money essentially. Does it work 100% of the time? No, but from my general experience, around 70 to 80% of the time it is successful if you apply this right. Now, how do you find entries? I'm gonna go over this in more in depth, but this is essentially what I'm gonna go over in a little more detail. So a chart pattern will kind of help you with these entries. How we find entries and spots, sell spots are through the chart patterns, which I will go over. And like I said previously, the success rate for these are between 70 to 80% if applied right. Now, what time frames do you focus on for these patterns? And as a trader, what type of trader do you have to be? If you're an intraday scalp trader, so scalping is you're in the stock for 30 seconds, 1 minute, maybe even 2 minutes, maybe even 5 seconds, 1 minute and 5 minutes. So use the 5 minute for your bias, 1 minute to enter. This is scalp trading. For day trading, as a day trader, if you want to hold a bit longer, I say more than 5, 10, 15, 20 minutes, maybe more than an hour. Start off with the daily chart, only to mark levels, and then to enter the trade, 5, 10, or 15 minutes. This is for day traders. For swing trading, you want to use a weekly chart, and then you want to enter it using the hourly, 4-hour, even the daily chart. Now, for long term, you got this is like your investors, long-term investors, your Amazons, your Tesla. Use the yearly chart, mix it in with the monthly chart, and you could look for long-term investments using these patterns. Generally, these patterns work well on, I say, the day trading, even the swing trading time frames. Scalp trading is not as successful. Reason being is with the 1 minute chart, it's a lot more volatile, so price can go either way very fast. But still, if you're quick with your charts, quick with your hands, you can actually implement this in a very successful way, which I have done so many times if I'm trading on my own. This is not something you trade with other people. You just have to focus on your own and lock in. Now, volume. Why is volume so important for the chart patterns? Essentially, volume is money, right? So when you look at volume is, if a play has no investors, this play is not going to move. So a chart pattern is essentially useless. But if a play has a lot of volume, so a lot of investors within this, a lot of players, a lot of money, this will work out a lot better. Volume equals confirmation. So without volume, the chart pattern would be irrelevant. There will be no use of the chart pattern So volume is your always number one. No matter what anyone tells you, volume will always be number one. Now, 3 types of traders. You got your breakout traders, reversal traders, and your range traders. So with breakout traders, they look for plays, and you could look at patterns. When they enter a play, they enter it on the breakout rather than entering within the pattern. So the play will break. Essentially, you could see here, when the play breaks out, they wait for a close above and they enter. A reversal trader would enter on the spot within the pattern. So they'll enter off this basis here. And then a range trader would wait. They'll either essentially buy it on the support and resistance. So if the play is bouncing up and down between support and resistance, they'll buy a support, sell a resistance, buy a support, sell a resistance. So these are the 3 different types of traders you have in the market. Now, when I talk about the 9:30 to 12 time frame, this is one of the most volatile time frames in the market. If I have to be even more specific, I'd say between 9:30 to 10 is the complete breakout plays, where plays are just breaking, essentially deciding a move. If I had to go further along, I'd say 9:30 to 11 is the perfect kind of time to put your trades in for me personally. So after journaling for a year, I found that my success comes between 10 a.m. until 11:30. So that is my go-to time frame. Now, during this period, what you're looking for are trending stocks. Use the Webull app. Go to your app store, your Play Store, whatever you have, Apple Store. Download the Webull app and just look for your top gainers. And your top 10, you could add to your watch list, even top 5, and you could look for entries. Now, catalyst. What is a catalyst? How does it help you with chart patterns? What is the actual gist behind catalyst chart patterns? How do they bode? How do they mix? Now, a catalyst is something which is an extra confluence. This could be earnings, PR. What I mean by earnings is, for example, a play might have earnings after hours, so this is running due to the earnings, or they might have had positive earnings, so the play started to run. PR could be something like, a bird flu. There has been a cure for bird flu. There has been a cure for COVID. There has been a, FDA approval. So that is PR, and if a play runs, that's extra bias, and investors are looking for bigger movement. Another one in recent days you could argue is quantum. So I think Hollow had a catalyst with quantum, or they're into quantum now, which a lot of small caps will do now going forward. Quantum and robotics, and that will be the focus. I feel like with PR, once this hits, a lot of plays will run. Now let's move into the chart patterns, and let's move into the bullish chart patterns. I'm gonna do a bearish chart pattern in the next video, so you guys have time to go through each video on its own, and it doesn't confuse you. Now, ascending triangle pattern. What is this? This is a bullish chart pattern, and is formed by a series of higher lows and upper resistance level. So you can see by this pattern here, look, there's a flat top, higher lows, one low, another low, another low. So these are higher lows. So this is an ascending triangle pattern. It's a bullish continuation pattern, and it helps bulls again look for continuation to the upside. Now I'll give you an example on LAES. The funny thing about this is, I think since I posted the ascending triangle, I posted it on Twitter. Since then, this stock, has it hit $10 or something? So it's been like a 250-300% move plus, if I'm not wrong. It's hit a lot higher than 10. I'm not quite sure. I've got to check the charts, but this has made a very aggressive move up since it's ascending triangle pattern, and you can see the time frame. In my opinion, ascending triangle patterns, 30-minute time frames usually work really well. And if you look at these two differences between these two, look, higher low, higher low, higher low, flat top, higher low, higher low, higher low, flat top, higher low. So it's essentially the same, is exactly the same. So that's how you want it to be, right? So ascending, one of my favorite patterns. This is for me one of my favorite patterns, especially if you use it on 30-minute time frame. Again, it's great, amazing for spotting continuing momentum. But what a lot of people go wrong with is they can't spot if it's a flat top or not, right? And what I mean by this is, so let's say a flat top, this is a flat top. As a line, a straight line is a flat top. And then this is your line. So that is a perfect flat top. What they do is, let's say the candle here, let's say this play is running like this. It breaks down, it breaks up, Right, this can't be a flat top. Why can't this be a flat top? The play's already broken out, the play's already broken down, the play's already failed. So you need to make sure the lines kind of align, so the candles go like this. You know, you don't want to go like this, break, then holds and breaks like this. You don't want it to be like that. You want it to be completely flat and aligned. That's your best chance of getting the highest success rate. Okay, so make sure if you do use this, use it like that. I will give you more examples on Webull. I will go over this at the end of the seminar on ascending triangle and the other patterns as well. Now the next pattern we have is a falling wedge pattern. This is a reversal pattern which consists of a wide top, right? So here, a narrow down into a cone essentially. Have you guys ever seen a cone? So if you actually look into this, like a cone, it just narrowed down, and the lines at the end they meet. It's like a slope, and buyers start taking control near the bottom. And you see here, what you could use to your advantages: 5 minute hammer candles, bottom wicks, and yeah, I'll give you an example of how to enter this as well on the Webull. This is more in depth, so if you read this, you can pause the video to read it yourself. But this trading pattern is a chart pattern used to identify bullish reversals in downtrends. This pattern forms when two downward sloping trend lines converge and contract in a narrowing formation. Again, this resembles a wedge on a price chart. So when these lines kind of like are sloping down and they contract together, this is when a falling wedge is formed. Now, the more narrow it gets, the better, and increases demand. Again, you could mix this in with confluences such as demand zone, and it helps you get a better entry. If you want to pause the video and read, you could go ahead. Now, I'll give you an example of when we use this again in Discord. CETX, a long time ago, I think CTCX or something. CTCX. So you see here, look, falling wedge, and look, breaks out. It ends up hitting 1.2 something, all the way from 0.75. Well, that was a great example of it for falling wedge pattern. Now another pattern, continuation pattern, is a bullish pennant pattern. And again, this pattern is used for breakouts. It's a continuation pattern, and it indicates continuation of play. So with this, I'll give you examples of entry on Webull, but this is another bullish chart pattern that you could use to your advantage. And look here, the Foxer was one we use this on. You got a flagpole, and then you got a pennant, right? And you see here, and it breaks up. And again, with the bullish pennant, it works best on uptrend continuation. Make sure you always look for that flagpole. So this is your flagpole, and this will be a pennant. Make sure you always have that flagpole. If you just have it like this, and you have no flagpole, that's not a bullish pennant. A lot of people get confused by this. Now let's just go over the Webull chart. I'll go over with you guys. Second, let's just go over. So we can go over our first one, ascending triangle, and how you could enter this. Go over Webull first. Ascending triangle. Okay. Now let's just refer to some examples. So I'll give you an example. So look, the delays ended up hitting what, 9.33. I think a lot higher than that actually. For a chart, they're 10.97. So it's gonna go down. Actually, when we use this, we used it around here-ish. So you see here, something like this. That's a triangle there. But let me just give you examples on the plane chart. So I'll give you guys entry examples. Be a lot easier for you guys to see as well. So this is a black chart. Okay. Now, this is your trend. Go to trend line. And this is your triangle. So a triangle will be like this. It's a flat top, right? But how would you enter this play? Now, you have 3 options or 2 options to enter. Number 1, let's just say the play is doing this. And just consolidating this, does this. So this is one of the options to enter. You wait for that retest and then you enter. So with this, what you do is you let it consolidate, you let it break out, you wait for it to come back and retest, and you enter on this break here. So you enter on that break, right, over 8.25 essentially when it breaks back out. Your stop loss will be right under the break. So here, and your stop loss will be under this support. right? So that's how you would enter something like that. For example, another entry could be, show you. So another entry would be, you could enter on the high low. So you see it forming, it's not formed yet, Now you start seeing a flat top. You could enter within the pattern as it's getting more narrow. So you'll be able to enter around, let's just say for this, for example, for argument's sake, 8.23, and you keep your stop loss under the line. So that's another example of an entry you could take. So these are 2 entries you could take on this. Third entry would be a high risk entry just on the breakout. As soon as it breaks out, and you wait for a close above, and you enter, and you keep a stop loss under the flat top. So those are 3 of your examples of your entries. With the exits, you just keep your stop loss under the flat top, you keep your stop loss under the line, or you keep your stop loss again under the line. So that's all it is with the ascending triangle. Now, let's look at falling wedge pattern. And a falling wedge is slightly different. I'm going to try giving you an example using like a pattern. Okay, here. This is a good example, yeah. Let's give you this example. So with this, right, you got here. It's getting narrow. You see that falling wedge. So you have entry 1. You wait for it to start consolidating with the low volume pullback. So when volume is important is here. So how does volume impact price on a candlestick? So when the falling wedge, you always want to wait for a low volume pullback. You start seeing a low volume pullback, you could enter within support, you could enter within the pattern here. So around 2.66 takes it there. Or you could enter as soon as the candle, so here it closes at 2.88. So as soon as the candle closes above, you could enter. That's another option. So with the candle close above, the only bad side is sometimes it could just break out too fast, you might not be able to get in. And they're entering inside, sometimes it just break down and it probably doesn't give you the same amount of confirmation. But those are your 2 entry signals. What's your stop loss? So with this, your stop loss will be right under support, so around 5% from entry. So with this instant, you'll see your support will be around this red candle. The low of the red candle is 2.56, so just under 2.56. For the breakout, you wait for a close above, and you want to keep your entry kind of under the candle before. So if you keep it under the candle before, the breakout candle before, that's where your stop loss will be. Now I'm going to try finding ascending. I can't really find ascending on this as well. And let me try finding an ascending pattern, guys, if I got it. Ascending pattern. It's harder to find ascending pattern sometimes. Sometimes you only see the ascending, sometimes you won't see ascending. You guys will realize more and more as you get more experienced. Yeah, but I don't see ascending as much. Okay. Another pattern is a bullish pennant pattern. How do you enter this? I'll give you an example. Let's just give you an example. If I could find it, it would be perfect. But I don't think I'll be able to find bullish pennant. I think it'll be harder to find. Let's see with this. Like this would be a good example of bullish pennant pattern. Why? So number 1, you got a flagpole, right? Your flagpole is this. Look at this. That's the flagpole. From here to here. That is a flagpole. And then look up, down, high, lows. So with this, your entry, you could either enter on a high or low, risk under. So you want to risk under that wick, previous low wick. So that'll be 3.5. You wait for a close above, you enter, and you risk below the previous candle low. So that's how you would enter bullish pennant pattern. Again, bullish pennant would be a lot more volatile than falling wedge. And yeah, that's kind of how you enter these stocks. Keep your stops. I hope you guys enjoyed this video. If you did, please guys hit that like button, drop a comment, and subscribe, guys. I'm gonna catch you guys tomorrow on Twitter. And yeah, peace out.